Bitcoin has lost almost half of its value since its November high, with cryptocurrency prices plunging as major economies look to curb their growing popularity. Peter Switzer, the founder of the Switzer Report, joins us live now. Pete, Bitcoin's value has halved. Is it the canary in the coal mine for a big stock market sell-off?
Yeah, there are some people, Pete, saying that. Look, certainly Bitcoin has become a key indicator that the attitude towards risk is either on the rise or on the slide, and it's on the slide right now. And I think the best reason for it is not the fact that the price has been ridiculously high and it's a speculative bubble, and that is one argument you can throw in the mix. But the bottom line is the US is worried about the Federal Reserve meeting this week, the FOMC meeting, where they are likely to be pretty clear about when interest rates will rise in the US. There's high expectations going to be March, and then, but the question is, how many rate rises will you see? At the moment, the markets are saying 5. The Federal Reserve has basically been implying 3 interest rate rises. Now, if the market's right and it's 5, well, then I think a sell-off of Bitcoin and a sell-off of the stock market all makes a lot of sense. But there are plenty of economists and market experts who think it's more likely to be 3. And if it's 3, this current sell-off of both Bitcoin and the stock market, and our stock market will be down today as it was on Friday.
Yeah, it was down. It got smashed.
Wow. Exactly right.
The eyes were all watering, Pete.
Yes, but it's been an eye-watering rise, particularly for the US.
Yeah.
And look, Pete, if you go back to where we were at the bottom of the coronavirus crash, we've had a nice big rise. But when you compare us to the US, and this is the important point, Pete, if you go back to where we were before the pandemic crash of the stock market, our market is only up about 4%, probably less after Friday. The US market was up about 40% from that high. So they're really in line for a big sell-off this year of some kind.
Yeah.
I think what will happen is they'll turn around and they'll rise again, but we'll probably rise by more than them over the course of this year.
So I tell you what, people with a high mortgage, a big mortgage, are gonna struggle if there is inflationary pressures that lead to those several interest rate rises that you just talked about. Now, that key word there, inflation, is going to be in the news a fair bit this week. Tomorrow, as a matter of fact. I mean, I've got the Treasurer coming up in the program. I'd like to get his thoughts on those inflationary pressures that people are going to feel too. So what is that going to mean, Pete? I mean, we've seen from fuel, it's more expensive at the moment. House prices are continuing to break new ground. What do you see happening if inflation does increase? I mean, I don't think it's going to get to the point of US and UK, right? They're at 30, 40-year highs.
No. Now, what I think, I'm not surprised to see economists tipping a 0.7% increase in the December quarter. That's the number we get on Tuesday. That will make our annual core inflation number 2.4%. Really, that's still low compared to the US. US is up around 6% or something like that.
It's crazy.
But the reason behind it is the supply chain problems. Everything's becoming expensive, and also petrol prices have been rising with the oil price going up. Now, all of those things mean that an interest rate rise this year makes a lot of sense. CBA had thought November. Westpac is now talking about August, about a 15 basis point rise, but the market is saying a 0.5% rise in August and a rise by 1% by the end of the year. Once again, I think the bond market, both in Australia and the US, are overarching. They're overhyping where we're going to go this year. Okay. We'll see a rate rise this year, but it won't be as significant as the market's saying. And that will be a good thing for stocks eventually, that they realise that the market was excessively negative and there'll be a buying opportunity. But it'll take some time before you get in.
Yeah, don't panic, Pete. Is that what you're saying? Don't panic today.
Exactly.
If it's more bad news on top of Friday's bad news, hold on. It'll all be right. Good on you, Peter. Talk to you soon.
Cheers, mate.